Welcome out to Tackle Trading's Trade Masters. I got two amazing coaches to help us navigate the fine world of the financial markets, and we're dealing with a little bit of volatility in the S&P 500. And you know what, Frankie, they say about volatility is it presents opportunities. And I've seen some of your trades you guys are going to pitch here in just a moment. We got a tech battle off in round one, and then we got some awesome setups in round two. And as the game goes here in Trade Masters, guys, we go through round one. We highlight the analysis, the picks. We talk about entries and stop losses and targets and why we like the setup and the type of strategy that the trader is looking at. And then we have a discussion on the two picks and talk about which one we like the most. And as the team goes in YouTube, let us know which one you prefer in each and every round. Before
Absolutely.
we get too deep in the woods in Trade Masters here today, we do have a new edition of Master Trader. The October Master Trader is scheduled. It starts next this coming Monday and Tuesday. And if you are looking for an amazing class to teach a technical analysis, how to read trends, patterns, support, resistance, candles, how to do the set method, and look for core rules on entry, core rules on stop loss, core rules on targeting methodology, come to Master Trader, sign up today. It's free with a free trial of Tackle Trading. You can hit the link in the description below. You won't regret it because Master Trader is the foundational class of everything we do at the number one rated financial education company in America, according to Trustpilot, and that is Tackle Trading.
For sure.
You will not regret it. You're going to love Master Trader, and that's the kickstart to everything else at Tackle Trading. With that said, Frankie, with that said, Bobby D, how you two boys doing today?
Doing good. Excited to be back with you and my man Bobby. Throw a few charts around, do a little prep work going into tomorrow. Always excited for Trade Masters.
Yeah,
Bobby, how's your day,
absolutely.
brother?
Yeah, everything's going well today. I'm excited to be back. Took down Frank in fantasy football this week, so I figured I would try to, push my luck a little bit
There you go.
today.
He did. It
You beat
was
him.
pretty
You beat
brutal
him in
beat down.
fantasy. You're going to beat him in Trade Masters. I think you won Trade Masters last week. And I'm just saying this so I can say three's a streak here, Bobby.
There you go. There you go.
Like three's a streak, tough to get there. One
Yeah.
word on the technical setup here in the S&P 500 very quickly, guys. As we all are dealing with right now, we're dealing with a little bit of volatility in the market. The market's trying to battle back and get back to some degree of consistency after that sell-off on Friday. And as you can see, the market's battling that 20-period moving average right now. It tried to get up and go earlier today. Got smoked by a tweet, come right back down into the range. Let's see if we can do it again here. Look at that 24 handle on the S&P 500. That's a level I'm going to be dancing later on tonight. Let's talk Trade Masters here today, ladies and gentlemen. Round one, Frankie. Since you
Ooh.
are the you're the veteran here, you get a pick. Who goes first?
Listen, I'm gonna have Bobby go first for our tech round.
Bobby D.
Let's let him
Round
bring
one.
it.
What's your pick?
Yeah, absolutely. My first pick, I'm going to go with Oracle.
Match
Yeah,
it
just
up.
looking at this setup, there's a lot of, post Friday, there was a lot of setups on Friday that, kind of, I wouldn't say got blown up, but, needed a readjustment. But Oracle, just looking at this, it just stayed with its true form where it's at. And with the tech sector, it's, still holding up. Plus, you got earnings behind you. You don't have it in front of you like most other, big companies coming up. I just think Oracle right now is in a good spot and, ready for another leg up. When I'm looking at here, as you're showing this intraday chart, for me, I noticed with the Oracle, it's treated me well on the credit side of things, with IB being relatively high around in the 60s. I think with this setup and with the moving averages pushing up, I think you can get somewhere down if you 30 days out, maybe trying to get below the 270 mark here on the daily, maybe try to get somewhere in that 250 zone, maybe, and, try to have some line in the sand with some defense, with those moving averages. But I think, Oracle right now is definitely in a good spot to either
Mhm.
you could go to the bullish side with the directional play. But for me, I think I'm going to play this one as a credit just due to, with its IV.
Do you think it's a little bit of its due? Because you're thinking bull put here and the
Mhm.
credit spread, right? You're thinking the credit
Correct.
spread here. Like you made a wonderful point on there was a lot of charts that did get blown up on Friday. Oracle wasn't one of them, right? You saw some volatility, but Friday's candle didn't even break the 9 EMA. Like at tackle trading, we don't see it as volatile. We don't see it as anything unless you break the 9 EMA. If you can't even break the 9 EMA, that's not a volatility type situation. So technical here, kind of, short up a little bit. Is your call on the credit more because you just want to take advantage of the high IV and quite frankly, a little bit of the volatility in the market has lifted up those option prices, being able to sell those for a little bit of a higher premium? Is that kind of where your head's at?
Yeah, no, absolutely. I think especially with earnings around the corner, even though Oracle doesn't have earnings, I think, it could play into the effect of other tech companies that do have earnings with,
Yeah.
As IV rises. So I feel even though they do have a relatively high IV, I think it's just better to play credits because you could definitely get some
Are you thinking
decent.
the monthly 37 days out?
Yeah, I was leaning more towards the 30-day. I like to go 30 days or
Like to
less,
go the weekly?
but I, sometimes I'll give it some, go 37. It just depends on because weeklies can be bid ask can be a little unliquid, but for Oracle, it looks like they're pretty tight.
I mean,
So
they're tight enough to get the job done. The monthly's certainly going to be a little bit tighter if you kind of go down to that same thing. Yeah, a little 40 cents, 20 cents on the bid ask spread. You come back out to that 30-day number. They're not too dissimilar, to be honest. Maybe a
yeah,
little bit more wide bid ask spread here. And you said you're thinking, and I was looking on the call side, but you're saying you're thinking about selling underneath what number again?
yeah, I'm looking around the 260 mark. We're looking through there, like
So a
around the
15
260,
delta contract
around
there.
15 delta. Yeah, try to get around. Normally, I think the benchmark is a 20 delta or less.
Uh-huh.
15 is in a great spot, I think, with 37
If you
days
can
or
get
30 days.
75 cents on this credit spread on a 15 delta contract, that ROID's going to be very good. And
Correct.
for those of you that don't understand ROID is a theta-based cash flow system indicator that I created a good 15 years ago to help understand the combination in a credit spread of what is your return on investment. And at a minimum standpoint, you're trying to get at least 10% ROI on a credit spread. That's kind of a minimum standard. So if your spread's $5, like we're looking at here on Oracle, you want to get a minimum of 50 cents. You're getting 77 here. That's obviously good. But if you have to sell a 25 delta to get that 77 cents versus a 15 delta to get that 77 cents, those are not the same trades. And so we take into account both delta, the probability of that actually finishing the stock price finishing above the strike price, meaning you're going to cash flow 100% of what you receive here. And so my large point here is just that 15 delta getting that type of credit. That's a really good credit spread in
Yeah,
my
it is.
opinion. So credit spread. What about on the directional side here, Bobby? If you are more inclined to say you're right, that chart didn't get blown up. You're right. We got a nice little double top on the intraday of right around 311. Could you entertain a directional trade above the 311 level?
Well, absolutely. I think, even if I couldn't find credit, I think you can even just buy a few shares. Like Frank always says, you do
Yeah.
not want to be in a stock. Even if you just buy 2 shares, you want to participate,
Hmm.
and get involved. And, I thought that was, a great point he made in the step channel the other day. But yeah, definitely there's, depending on what you want to do, you could do a debit spread, right above that 311 area. I think there's a lot you can do on Oracle, whether it's buying
Yeah.
stock, shares, or
Kind of
buying
dealer's
some type
choice
of
a little
option.
bit.
Correct.
Very much
Yeah.
so.
Yeah. Love it, Bobby. Love it, Bobby. Got so pick number one, Frankie, is a bull put spread 260 by 255, 30 days out, getting 77 cents credit
That's nice
on a
credit.
15 delta call, 15 delta strike price. Pretty good trade, 85% probability, cash flow right around 20% ROI.
Yeah, it's a real nice trade, right? It's a real. I feel like I'm playing against Coach Mark though, who's kind of cheating a little bit. I'm going to say
Uh,
was yeah.
that the delta dog to the theta trader every single day for the rest of your life. Yes.
Absolutely,
Yes. Yes.
absolutely. But
Theta cheats. There's no
I
doubt.
can't. I mean, that's a solid little
Good trade.
credit play. Nothing
Good
at
trade.
all wrong with
What's
that.
what are you going to beat it
Well, I'm
with?
going to use some of that credit, and I'm going to go snag me a little something something on AMAT.
Oh, a little tackle 25 applied material action
That's
here,
where
huh?
they live, and there are some interesting looks in semis, no doubt about it. But I think AMAT is the most interesting look to me at this point in time. This is a pretty nice little breakout, and most folks at tackle trading have had I would say a fair amount of experience over the years with our friends at AMAT. And so if you've tracked AMAT before, you'll know that AMAT is not yet back up to their all-time highs that are in that 255, 256 ballpark. We're coming out of a high base. Earnings will be a factor here. They're the first week. I want to say November 5th. Don't quote me on the day, but
You got time though here. Like
you
it's
got
not a
time. Yes.
big part of it. Yeah.
It's not like next week, right? You have some time on these guys. Being AMAT, there's a million things you can do.
Can I quickly talk about that time? Just very quickly, Frankie.
Yes, go right ahead.
At tackle trading, we have specific rules for swing trades at tackle. A lot of our community loves a good old-fashioned swing trade. And as a swing trader goes, especially when you're doing on the option side of the equation, you're not going to want to hold that trade through an earnings. And so the time component going into earnings is very important, because if you only have 3-4 days going into earnings, that's not a swing trade. You might be doing a momentum trade. You might be doing, something pre-earnings, but a swing trade is pivot to pivot. You're waiting for it to get back up into resistance. And on average, for that to occur, it takes a good 7 to 10 days. And so you're looking in front of earnings, you really want at least 7 to 10 days before that earnings, just to really kind of even look at a swing trade. You certainly got that time here.
So yeah, absolutely. And then it is important, right? Because we don't hold swing trades or directional trades in general through earnings. That's a volatility event that anything can happen. But these guys have plenty of time. Do they have time to get back up to that 250, 260? I don't know, but I don't think they necessarily need to make this a really solid little trade. They actually broke out of the top of that little shelf here today. So I think you can build over today's candlestick high from an entry perspective, and going to have a few legit options, in my opinion, for stop loss. You want a tight stop loss? Just play the bar, right? Just play over under today's bar. We get momentum going. Let's rock and roll. You could probably justify jumping as low as the double bottom that got put in on the intraday on Wednesday and Friday of last week, which lines up with the 20-day moving average. You can meet in the middle, snag that 9 EMA. So I think just depending on what kind of stop loss management you prefer, I think this one does present three really solid options. And one of the first things I told Bobby when we started working together was I was like to price out 3 stops, even though I kind of generally know where I'm probably going to go because I know myself, right? I think it's just a good habit to get into. I like under today's low, but I have no issue with under today's low, under the 9, or basically under the 20 combo with that double bottom or the low from last week. Being AMAT, you can do just about anything that you would want to do. But you know what I like, Maddie, with kind of where my head is and kind of thinking the bar itself here, I like jumping in. You know me, I'm a spread guy. Not very often am I popping calls. That's just not how I roll.
You're not a YOLO.
I'm YOLO, but I would rather,
you're not Twitter YOLO. Let me put it like that.
Well, I like the very natural hedge.
You're tackle trading.
Yes, I'm tackle. Yeah, I'm one of the more YOLOs of tackle trading.
You're a disciplined, consistent trader who just loves direction.
Exactly. And I was looking at the November 240, 260 because we all know semiconductors can move, right? I don't want these guys to have to get to 260 for the trade to work out, but I'm not going to be surprised, right? Or approximately, because that's right near where their all-time highs are. So going into the November, I don't really need to pick up a whole lot more time because I know I'm going to be out before November expiration because it's earnings, right? So I know I'm going to be hitting the road at that point in time. We're going to come into this thing for about $5.35. Right. So $5.35 a share on an AMAT, perfectly reasonable. That's a 20-point spread. So that is a relatively inexpensive trade to go, to as far as cost is concerned in my eyes. And if we're going under today's bar, you're probably not risking much more than $200 on that thing. Even if you're going under the 9, you're probably not risking much more than $200 on that thing. Generally, I would be very open to just position sizing to risk. Be like, if you don't want to put a stop loss on and are comfortable risking the 230, the 535, then then do it. But because earnings, we don't have time to sit through a pullback and then a recalibration, right? Because of earnings, just don't really have
You
the
got
time.
time to
So
giddy up and go.
we got time to giddy up and go, and it doesn't have to rocket ship to the moon tomorrow, but we can't sit back down, come break through the double bottom from last week, reestablish support. We just don't realistically have that time. So I do think you are putting a stop loss on this. Heck, you could, like Bobby said, you can always just play shares if you don't like the spread, or if you don't like the calls, or don't know how to do those things. There's no rule that says you can't have a small position on anything. Right. But I do like the spread itself, really good risk to reward with the stop under either today, the 9, and I wouldn't fault anybody, but a little further than I would go personally, the double bottom or the weekly low for last week.
Another stock here that talked about the volatility on Friday, and it's obviously been all over the place. Another stock that did not break trend, did not break support, did not break pattern. Literally just another day that ended in Y for Applied Materials, and it consistently developed in a very clean high-based consolidation pattern. Looking at the breakout, looks pretty good. That's a hammer going into that breakout as well. That's pretty good look going into that breakout. Got a spread play on Applied Materials. So round one here, guys. We got the bull put spread on Oracle. 15 delta contract, getting it right around 20% ROI. Really good credit spread, in my opinion. Got plenty of time on that one. And then on the second pick, Coach Frank came out with a bull call spread on Applied Materials on the clean high base consolidation break, trying to get you up to that all-time high. As we saw both of these trades, by the way, I thing I love about trading and tackle trading in general is you can do them both. What's your thoughts after seeing both picks? Let's go to Bobby first. You still love your Oracle pick, or are you going to go switch to Applied Materials here?
Be honest, Bobby, because I know you, bro. I know you.
You're talking to two people who know you.
It's a hard answer. I would do both, but if I had to pick one, it definitely would probably stick with my Oracle trade, just because, like I said, no earnings. It's a safe bet. Like you said, 85% probability on the Royd. I just, the setup's there. I think
you got an edge on the direction, and you're picking a cash flow safe strategy. It's a good trade setup.
It's a really high probability
credit
trade.
Traders would pull.
And plus, you never know. It might take, like I mentioned. We have Tesla coming up with earnings, Apple coming here in the next couple of weeks. It might ride a wave. Might ride one of those waves somehow. Carry on with them. So
I don't even know if like for Applied Materials, I don't know if Applied Materials is going to have to wait for Netflix. They got Taiwan Semiconductor tomorrow.
Yeah, they do.
So that's going to have an impact there too. Personally, what about you, Frank? You sticking with Applied Materials?
Yeah, I mean, I do like that credit spread. It's hard to say anything about it, but I don't like comparing an apple to an orange, and I feel like that's what we're doing here. Both good trades, but very different types of trades. But if I would stick with AMAT if I had to pick just one or the other.
You know me. You say AMAT, and I say what's up.
That is very true, and that's been very true for many years.
AMAT has been on the Tackle 25 for now 10 consecutive years. AMAT, there's only 2 stocks that have been on the Tackle 25. I don't want to say longer, but equally as long. And one of them is Bank of America. The other one is Applied Materials. That's how long Applied Materials has been on the Tackle 25. If you want to go back to where the price was, you can't see it because it was so low back then.
Good times.
It's been a good time. There's no doubt about that. I'm going to go with Applied Materials. I love the setup. It's a clean setup. You know me, I'm a sucker for a clean breakout, Frankie. Like I just am. I'm a sucker for a clean breakout. But that doesn't mean anything against that Oracle trade, because that Oracle trade, it's hard to get me on a credit spread versus a directional trade. That's really hard. Like if Mark was here, he'd be like Oracle.
Yeah.
Oracle. If Gino was here, Oracle. If Greg was here, Oracle. Like that's just how it goes. We all have our preferences, I suppose. Thank you, gents, for your conversation and your detailed assessment on both Oracle and Applied Materials. Our team and myself both appreciate that. Let's go to round 2 here. Round 2, we got. I'm not going to say the stocks, obviously, but Frankie, Bobby went first in round one. Why don't you take the baton?
I'll kick us off. I'll kick us off in round two here, and I'm going with SellH, Old Celsius Holdings. No, I hope Bobby remembers this. I know Bobby, so I'm assuming that he does. But back in the spring, me and Bobby and a lot of the dogs of tackle trading were waiting for what seemed like ever for these guys to break out. They were stuck under some long-term moving averages. It was worth the wait. When they finally did get through that, it's been a pretty great run ever since, and I expect that run to continue. To be quite honest with you, which means any chance I get, I'm going to be very open-minded to getting involved, and I think we have a chance right this very second here going into tomorrow. Now, entry-wise, I say you go over today's high. Right over today's high.
I think it's a debate.
But I do think you have the debate. I do think you, if somebody wanted to just play the breakout, that's not going to cost you that
close,
much,
right?
For that confirmation that yes. So again, I think that will depend on the trader. I
like above today's high personally.
I do too, but I have no issue whatsoever, and I think you're fine if you feel like you need just a little bit more to go through here on SellH. If you think about these guys, they only really have one, and it is one challenge level at approximately $69. That was an old pivot back in 23. Things were going really great for SellH in September of 23, and then it ran into $69, and then it did not get back above that for quite some time. So we have to respect
beautiful M formation.
Oh, it really was. It really, really was. Right. Became a very important resistance level, and then it became a very important support level after they finally broke through it, had a monstrous run, deep sell off. And that's, as you like to say, Allen Iverson crossover on a dime as it tested that old resistance and right back up to the M. So you got that $69 is an old level of resistance, old level of support. Big price action has occurred at that level. So I do think that does need to be our first target in this particular case. Now, I like to say
that in and of itself is perfectly good enough.
But that is in and of itself perfectly fine. But I don't think that's why you make this. I think you respect that because it's the sensible, responsible thing to do. But I don't think you're trading this just to get to $69.
Yeah, that's the base hit, right?
Although if you're playing today's bar, right, and I think again, I think when you're thinking stop loss, this has two very, very easy options: under today's low, under yesterday's low, the swing low, right? Whichever you prefer. Again, I'm under today
combo 9 EMA.
Yeah, or go the swing low itself. And the swing low is going to cost a noticeable amount more. So I'm going to, it's not that I wouldn't rather have the swing low, but
I'm not sure you have to get it here.
I don't feel you have to get it here. No, I don't think you have to get it here. And my call is just to go basically play the bar, right?
Play the bar, 9 EMA catch up, 9 EMA rider.
Exactly. And if that's, how you're thinking about this thing, I mean, you're well over 2-1 just to that $69 level, right? Yeah. You won't be there, but you'll be, the threshold is at least 1-1 using, for T1. You're fine if you are using the swing low. You're still closer to 1.5-1 than 1-1 to that $69 level. So both can play as far as I am concerned.
What's your anticipation for T2 here?
My anticipation for T2 is we open up the floodgates. I'm thinking 75 is a legit target ahead of earnings.
There's just not a lot of technical pivot.
There's just nothing. I expect if this break, who knows, but they sure picked a crappy day to break out because they tried to break out late last week, right before the Friday selling, right? And if you think about, kind of
honestly, I don't mind the development afterwards. Like this.
No, it's been great. It's been great.
Kind of reset it. Look
and
at
if you think
going into the breakout,
cleans out that breakout, cleans that up really, really nice, giving you that nice hook. If you look at this from we've been sideways, right? And we have, right? We didn't know it at the time, but we've been sideways since basically we gapped up on earnings last earnings season, right? And that range takes us to about $75. So I think that is a legitimate secondary target. If they do get through that, I'll be open-minded to, opening it up because momentum's a heck of a thing, right? I never want to get in its way. And I always want to hope it's playing my way.
What do you think?
You can play this a lot of ways. I would probably prefer, all things being equal, I'd probably prefer shares on
Yeah.
sell H personally, but you can absolutely, play some call options. These guys
You can
are,
easily make this a pure swing trade. Yeah.
yeah, these
With
these
options.
guys, you probably, they're one of those expensive options, right? They're always expensive
Mhm.
type of names. So if you are playing options, or if I am playing options on something like that, I'm always selling something against it. I'm never just buying the call. Again, I'm not generally doing that anyway, but it's not that if AMAT had dirt cheap
70,
options, I
70
would
implied
buy it.
volatility is a high price tag.
Yeah, I don't think you just want to pop a call, but you can easily,
Pop
pop
call, sell
a,
call.
like the 60 November 65.75 going to run you, I'm guessing about $3 on this for a 10-point spread.
That is
Probably
honest. The 65 by 75 November is about textbook bull call spread as it gets. 50
yeah,
delta contract, 25 delta contract, net delta of 25. You're
yeah, delta
offsetting
25.
40% of the spread. It's textbook, Frankie.
Yeah, so if you don't like the shares, it is, not a super expensive stock, but it's also not a dirt cheap stock like the one Bobby's about to talk about. I got no problem with that. I just, even if it's not that spread, I would be leery of just popping calls on stuff like this. But the spread itself,
Especially in
very
the
reasonable.
environment. Like
Yeah.
you can't tell me at this point in the saga as we start earnings season, we're dealing with tweet mania right now, that this is the go to the moon, rip the socks off and selling out of the money put option to fund an out of the money call option. This isn't that environment right
Not
now.
quite there.
Right.
No.
So I love the analysis there, Frankie. So really appreciate it. Bobby, you're coming with the healthcare pick. Talk to me about what, before we get into the actual pick itself, talk to me about healthcare, because you made a comment when you came into the stream that you kind of like healthcare in general. There's a lot of setups in healthcare. And what are your thoughts on healthcare in general? Do you like the pullback here?
Yeah, no, absolutely. I mean, I kind of highlighted this one last week as well, as we were going through, some of our picks. Healthcare, just if you look at the weekly chart, it's in that zone, sort of like a gator's mouth. Broke the trend line, pulled back, kind of like the Cody special into that trend line,
Yeah.
and you just got some clear up, to the 150 zone. Yeah, I think there's more room to run up there, and I just think that with that being on the sector, Oric was sort of kind of looks like the same thing. Just got beat up. If you look at the monthly chart here on Oric, they just I think they were a new stock back in the 2020, and
Good
they
call
just got
out on
beat
the
up.
monthly chart. I was not familiar with your game, Oric.
Yeah. Yeah, it just got beat up over the years, and it looks like it's just trying to rebound, it's trying to come back and get some life back up to that 35 zone. And I think this is the start. This is the start for that next leg higher. It has to get through the 16 and 65, and it gets through there. It can get up to that 35. So I think just strictly for this one here, you could, it's cheap enough. You can buy some shares. I do a nice little swing trade here, and now you do have earnings coming up. I think it was November 10th on the
Yeah.
chart.
Yeah, but again, like 3 weeks and it's more than 3 weeks, but 3 weeks is a lifetime for a
Yeah,
swing trader. Like it's
Yeah.
plenty of time.
It's an eternity sometimes, right?
It really, especially when the trade might be 5 days. You know what I mean? It might be
yeah, yeah.
10. You don't know, but you got plenty of time and distance here.
Oh, absolutely. So you have enough time to do like a little swing trade here. Like I said, for me, um, first thing I would do is I always look at the hourly. Coach Frank nailed that in my head. Look at the hourly, especially on these pullbacks, because you never know what you're going to be fighting. And so um, you're not really. I think you're right in line with those 50 hourly moving averages.
The flag here is pretty consistent, honestly.
Yeah.
Yeah,
Flag pullback there, and in a flag, if you don't mind me just teaching a little bit here, Bobby.
yeah, absolutely.
In a flag, what you're trying to look, so a bull flag is typically a pullback after momentum to the 90 MA. That's kind of our gauge of support, is the 90 MA on a flag. And so you obviously got your momentum. This was the pharmaceutical announcement out of the Trump administration. You finally got your pullback there. pretty consistent on the downward drip here. You start battling that 9 EMA. And so you're saying, okay, momentum, pullback, 9 EMA, flag style, break it down on the hourly chart. And when you look at the flag on an hourly chart, you want a consistent downward trend on the hourly chart without too much volatility. I think we have that here on Oric. But one key point here is when the price tells you the flag's over. And it's the same concept you have on any type of pullback, whether it's a flag or in a shallow retracement, or whether it's a deeper retracement down to like a 38% Fibonacci level or 50%, whatever it is. You're looking for that double bottom on the intraday side. And so you got this downward drip on the flag. You got now a double bottom over the last 3 days on the flag. That tells you that the selling is ending, is what it kind of tells you. And now you're kind of testing that upward channel here on the flag. It's a pretty good little flag-based pattern here, Bobby. You're looking at entry just above the high here?
Yeah, my entry looking here, just after looking through that hourly, would be just above today's candle. I think you can't with your high is 1404, so I would probably do 10% of the ATR there. So give or take, that would be around the 1420-ish entry point. Like Frank alluded to, you want to give yourself options on the stop, so you can either go below today's candle, or you can go below the pivot of yesterday's candle.
Yeah, I think you go the pivot here.
It doesn't cost you much to get a lot.
Exactly.
That's a great point. That's a great point.
Yeah, for sure. So it doesn't cost you much, and so they're very, like I said, they're very close. So yeah, I would go under yesterday's low. And target wise, I like to give myself a couple targets. I mean, I would be a little bit conservative on my target just because you have earnings right around the corner. But for me, my T1 would be into that 1550 zone. Beyond there would be 1650 into like the 18 price zone, which gets you into the 1650 is that last standing resistance zone
Pivot right
at the
there.
top. Yeah.
And honestly, this might be this trade's obviously you're kind of prepping this for in between now and earnings. But just to put a button on this one, let's go back out to that monthly chart, because if we start dancing, if this trade works out, then we get a decent little earnings environment. There's a lot of room
giant
here.
window.
A lot of room.
We call that the giant window of doom. Yeah, it's beautiful.
And me and Frankie, Bobby, we are a sucker for a mid-tier breakout.
We do love those windows. We love them.
I've been embracing those type of
favorite patterns in the history of mankind is mid-tier.
Yeah, they're pretty fun.
Yeah.
So yeah, just a little swing trade out. I mean, for me also too, I like to do, and Frank could probably contest this as well, just in between here, a little ATR scale out, before I hit T1, I like to, make sure that I, kind of move my stop up, lock some profit in before, because anything could happen, it could go up, turn back around, hit your stop, and, you have a loss. But so I like to have a little ATR, target as well, just so I can, be able to lock in some profit, take some off the table as well.
You know what I love about Trade Masters, and what I love about YouTube breaking these trades down? Like, you're not talking about, like, I've seen so much trash on Twitter and YouTube in the last 5 days. Wow, those algorithms are just crazy, crazy.
Oh, yeah.
You click it once, bro.
Like everybody lost everything on Friday, but apparently everybody actually bought the dip on Saturday, but they somehow went back to Friday to be able to do that. And then they were like, the end of the world was going to happen on Saturday before it got resolved on Sunday, and everybody got back to making like billions of dollars on Monday. Like it was insane. Like everybody and their dog. This. Here's what I love about Trade Masters. You got Bobby talking about a potential trade, but he's talking about it with confirmation, right? Here's confirmation. Here's what I need to see to get confirmation, the insurance that I'm right on the projection. Here's my stop loss, just in case I am wrong, because I'm not a YOLO bro, but I'm a trader, right? There's a key difference between YOLO bros and traders.
Oh, absolutely.
Bobby's a trader. We'll let the YOLO bros go hang out on Twitter. Bobby says, you know what? me and Frank's geeking out about 35. We're geeking out about that mid tier. We're thinking three
Beautiful.
trades down the road, right? And Bobby's like, you guys, we got earnings coming up. Come on. We're going to target 15 by 16 and a half because we're going to be sane, rational human beings who aren't going to say it's going to get to 35 between now and earnings day. I love that analysis because it's spot on. It is 100% accurate. From the time you got into earnings to the confirmation conversation to the targeting techniques to where to place a stop loss, those are core trader techniques. And I just absolutely love that. And that goes to a lot of what, Frank, I know you were Bobby's coach and you taught Bobby a lot of these little tricks of the trade, right? And that goes to a lot of what you're doing, but obviously you do this all day long as well. I just wanted to pay you two a compliment because
We'll
I've
take
seen
it.
a lot of trash out there. This isn't that. You guys are amazing. I just wanted to pay you a compliment because it really stood out to me. I'm not just trying to, you guys know me. I'm not trying to just butter you up. I thought the analysis was rock solid, rock solid. And if
Right
it
on.
wasn't, I'd be like, what are you guys doing?
What are you doing? What are we
What are you
doing
guys
here?
doing?
What are we
Yeah.
doing here?
All right. I'll go first on which one I like the most. And so when I'm looking at Oric versus CELH here, I like them both quite a bit. They got good stories long term playing out that you guys are just looking at the short term trend against the backdrop of a beautiful primary uptrend and just talking about the techniques of how to maximize your entry, how to maximize your targets. CELH mid tier is already in progress after a mid tier breakout. When you're looking at ORIC here, ORIC. Oric, you can't see it on the weekly chart because you got to go a little bit
You got to go
deeper
way
here.
back.
But that is a really good backdrop here. And what I like about it, Bobby, is everything you're doing is just kind of front running. I'm a sucker for a clean flag. There's no doubt. I am a sucker for a clean flag. I'm going to go with Oric on this one. I thought round one, I went with Frankie with applied materials. Round two, I'm going to go with the flag based pattern in front of that mid tier breakout on Oric. Frankie, what about you?
Yeah, that's tough because I will Bobby it and say I intend to party with both. Uh, ooh, if earnings weren't a thing, oh, what a world that would be. Earnings not a thing. It would be Oric because I would be like, you're targeting to that 1650, 1675, and then
This would be
that
a
thing
front
goes,
run into a
and
position
we're like
trade.
rolling,
Yeah.
rolling, right? I really do like it. But like you said, we got to be reasonable people. I think that 1650 is the target in this trade. And then we'll kind of see where we're at.
You're happy as
Yeah. Oh, you're very happy. It's a great trade if you do that. So if earnings weren't there, the monthly chart, the long-term story turnaround would sell me. SellH has been pretty kind to us though since it began its version of the story.
The dogs have history
of a few months back. I think I'm going to stick with my man SellH, but I do really very much like this ORIC flag. I do think.
What about you, Bobby? Did Coach Frank's pitch on CELH did it get you off your Oric, or are you still saying I'm going to do both?
I would do both. Obviously, I would do both, but if I had to pick one, I probably would pick Frank's pick, and the reason being, and Frank kind of mentioned it. It's been good to us. Us dogs.
You guys have
we've been on it. We have history with it. There's a lot of stocks that we have history with. So especially that one, I'm just going to continue to ride.
We
the
get
wave.
around.
This one's definitely on the radar.
Tackle Trading have a philosophy, and I absolutely love it. And if you guys wanted, if anybody here wants to get access to the Delta Dogs, it's Coach Frank's Trading Lab at Tackle Trading. You can talk to anybody at Tackle about it, but it is Coach Frank's Trading Lab at Tackle Trading. So whenever we say the dogs or the Delta Dogs, we're referring to the trading lab that Coach Frank runs. It's Monday after the close, and if you love Trade Masters, there's going to be two things you love at Tackle Trading above all other things at Tackle Trading. Number one is the Delta Dog Trading Lab. And number two is the traders report, because that's basically what Trade Masters kind of represents, is the conversations we like to have in the Delta Dogs. We obviously have some of these conversations in the General Traders Lounge as well, but that Delta Dog Trading Lab and the traders report for the pros on Friday, that's these two picks could be there on Friday. We'll see.
We talk some charts.
We'll
I hope
see.
they're not, because that means they ran
That
too
means they're
much.
still in progress.
There's a good chance they ran too much. Is
What are you
like, you
talking
know,
about? I want to get confirmation tomorrow. I want to get 1650 on Friday. That's
you're damn right. That's exactly what I want.
I want.
It never hurts to
Oh,
ask.
I love it. I
Absolutely.
love it. I love it. I love it. I also love Trade Masters and our team watching Trade Masters here today as well. Let us know in chat which one you guys prefer in round 1, round 2. And if you're watching this on replay, as I know a lot of our pros in our community like to watch this on replay because they have other lives going on at this time, let us know in the comments section which stocks you do prefer in round 1 and round 2. And if you want to give us a little bit of a reason why, we would love to hear from
Love to
you
hear the
on
thoughts.
these potential picks as well. Frank, Bobby, love Trade Masters. I loved it last week. I love it this week. Bobby, you know where this is going. I think we got round 3 next week, brother.
Absolutely, you do.
Who does it? Like, we got to have a trilogy here. And then after we have a trilogy, we got to think about prequels and
Yeah,
stuff like
yeah.
that.
What you just were told, Bobby, is free up Wednesday, bro. Indefinitely.
Don't worry, I'll free it up.
Free up
I need to
Wednesday,
be
Bobby.
frank.
We're happy to
Free
have
up
you, man.
Wednesday.
Happy to have
Oh,
you.
let's do some final thoughts. Bobby, let's go to you first, then Frank, and then I'll finalize it.
Yeah, there's a bunch of picks out there, still waiting to go. Frank posted his watch list out there in the Step channel. If you're hanging around there, take a look at some of those picks. I think there are a lot of them are good and ready to go. And market right now, I think we're still in a wait and see mode just to see where we're at. But I think like I said, hopefully we can get some more bullish days here.
Yeah, I hope so too. I hope so too. It'd be good to see a little bit of bull run. Earnings season so far has been good. Like,
Had a good start.
I don't want to say it's been great. We got to see a little bit more before I give that the official categorization, more than just the first 2 days of earnings. But
Yeah.
Good
you've
start.
done everything you've asked for so far from the fundamental side of the equation. The banks have done good. The earnings landscape is still intact. And if you're looking for a detailed assessment on all things earnings, you don't have to go far from tackle trading. I posted an earnings preview in the Trading Justice podcast on Monday on our YouTube channel, so you can definitely check that out as well. Frank, final thoughts.
Yeah, well, as always, a pleasure. Thanks for having me, and thanks for joining us, team. As Bobby said, I put my scan in the Step channel, but if you are not a member of our pro community, I'll remind you, never better a day than today to hop over and take advantage of that free trial. I will also, when we're done here, put it in the new traders chat for you over on our Discord channel so everybody can get access to that scan. Bobby, myself, the dogs of tackle trading, we have a pretty simple philosophy, and that's ABT. We always be trading. We don't have to be heroes. They don't have to be big trades. A lot of times they're really wimpy trades that aren't going to impress anybody, right? But I'm not trying to impress anybody, right? See a trade, take a trade. There's still trades out there. Earnings will be annoying, but I'll save that. I'll complain about that tomorrow in the lounge, and the next day in the lounge, and Monday in the lounge. I hate earnings season, FYI.
Yeah.
But as always, thank you for joining us.
I don't mind it. It sets themes for great trades down the road, but we do have to learn how to navigate that. Frankie, you said you're not trying to impress anybody, and these are my final thoughts. I'm going to have to go ahead and disagree with that. Your beard is extremely impressive, and I am extremely jealous of
getting
what
big.
you can grow on this face. It's just fantastic. It's developing into a life of its own right now.
Very impressive.
It is.
Yeah.
I figure I come this far. I might as well make it through the holidays, if nothing else.
I'm catching up to you real quick there, brother. You got to be worried.
Yeah, next week at this time, you're going to be looking like old Saint Nick.
Maybe by the time I'm 80, I can grow that type of maybe. My final thoughts are twofold outside of that. Number one, if you ever want to if you're having a bad day and you want to look at something beautiful, just pull up the gold chart. It's the most beautiful thing you'll ever see in your life. And I just want to say welcome to the party to the entire universe of humanity who is purchasing gold in the last year. It has really helped long-term holdings at Tackle Trading by everybody at Tackle Trading. Since we've been preaching gold ownership for literally 10 consecutive years of max position. We know why gold's going up, even if Treasury Secretary Bessent doesn't understand why gold's going up right now. That's number one. Number two, if you want to learn how to be that cutthroat great trader like Coach Frank and Coach Bobby here, I got an amazing class coming up for absolutely everybody. You can check it out. Master Trader starts Monday and Tuesday. It is free for pro members. Hit the link in the description below. Become a pro member. Come join me in Master Trader, and don't look back with the #1 education company in America, Tackle Trading. With that said, I hope everybody has a blessed day. Tackle Trading, we love you. Let us know if you need us, and we'll see you tomorrow on the lounge.